Oh my God. Oh. Okay, folks, we are live. For once, I'm on time. And for once, I remember, hey, you got to plug in the microphone. And then I can't find the cord. It comes undone. How's everyone doing? Happy Sunday night. Sunday Night Futures Live. Welcome. Hope I gave you a giggle, a laugh, and let's get started. Nothing like embarrassing yourself in front of a couple of dozen people. All right, let's do it. What we're going to talk about tonight, the usual. We have a lot of charts to go to. So we're going to go to economic data that was released last week, what's coming up this week, big Fed meeting this week. Be very, very careful of getting levered up in advance of this Fed meeting. We're going to talk about some news that's out, how the government just continues to shoot themselves in the foot in a rising inflationary environment. The inflation data last week was horrible. We're also going to go over stock chart requests. I have a bunch. We have new members that quickly took advantage of the chart request functionality. I don't know whether or not I'm going to have time to get to everybody tonight, but enter your symbols and I'll try to get to you. But I do already have like 2, 4, 6. I have 8 to go over already. So let's get to it. So we have the futures that are open. Now, the reason why I'm starting off with gold, if I remember later on, I'm going to go to TrendSpider and I'll show you the seasonality of gold for the next 3 weeks over the past 5 years is very strong. So we'll see whether or not we get a replay of seasonality. This is a daily chart. I want to drill down to a 4-hour chart because on Friday, we broke out on a 4-hour time frame. And we are now consolidating. I think we're breaking out higher. I think we are going to see that seasonality effect on gold. It should carry through to the gold mining stocks. Now is a seasonally favorable period of time as well. And it only gets better into the new year. I think the final week of the new year, past 5 years, up 80% on the GDX. I think NUGT was 100%. So again, only 5 years worth of data, so let's put that into context. Let's go to some comments. Said hello to people. All right, we got a bunch of people. Hoji One Kenobi, hey, brother. Hey, Bo. I did have a good weekend, thank you. I was away for Thanksgiving, and my wife, she bought an extra bird, so we had like a redo of Thanksgiving. She did a very nice job. And I got that. I swear to God, when I was done, I forgot I was going to go live, man. And I got that. Now you get tired after you eat turkey? Whack me out. I was drinking coffee. Priceless. Yeah, my little stunt with this microphone. Joseph, on board tonight, doing well. I hope I am. Thank you very much. Same to you, I hope. Danny, hey, brother. Sunil, good to see you. Tom Lou, hey, Bob. AEM and KL, then back. We'll go over Barrick since you have a question on a trade there. I wouldn't. Not the gold miners, not this time of year. Maybe after the first of the year, but not right now. Seasonally very, very strong for the miners. That's it, Joseph. Tryptophan, yes. Thank you. Oh, smash the like button. Thank you, William. Thank you, sir. Larry. You're the one that sent me. That's the funniest thing. Okay, so you sent me the chocolate. I got an email on Friday night. I was out. It was from Dan over at TrendSpider. He's like, hey, listen, I want to send you something for Christmas. Send me over your address. I said, okay. Next day, I get a package. And there's a card. Merry Christmas, Bob. Very, very nice. I wish I had a photo of it. I'll bring it up on Thursday. But it wasn't signed. It didn't say who it was from. So I'm thinking, how did he get, because they're over in Chicago. Dan's over in Chicago. How did he get this package here within a couple of hours? So I reached out to him. He said he didn't send it. So, all right, now the mystery's solved. Okay, thank you for that. Larry, thank you very much. I appreciate it. Thank you. Sunil, I did YOLO on Hood last week. Can you do analysis of Robinhood? There's not a lot of data on Robinhood. I know it was oversold. It was a watch stock for us about 2 weeks ago. There was a bunch that we had that were extreme oversold stocks. Hood is not my favorite. We could take a look. If I have the time, we'll take a look at it. But certainly not my favorite stock. I don't like their business model. I don't understand their competitive advantage over another company. And I don't like the relationship with Citadel at all. So can you view a chart BNGO this evening? Sure, I'll make a note of these because now we're getting long on the list. BTI. Right, I'm going to have to go back through these and make a note. Tell them I plan to get you 124. Thank you very much. But the NFGC pulled me down. Did I say to buy it or something and it went down? I hope not. All right, let's go to the futures. Okay. Let's take a look at the US dollar. The dollar is you take a look at the dollar on a weekly time frame, it's at a critical juncture. We're either breaking out or breaking down very, very soon on the dollar. Now, this is showing that we are down at current. That is not the case. We're actually up versus Friday's close. So we're actually up. And that's probably why gold is not up right now. Let's take a look at light sweet crude. Light sweet crude is a bit of a mystery right now. The fear of a global slowdown. I mean, this Fed meeting is going to mean a lot this coming week. I'm trying to draw a line here. There we go. Okay, so as you can see, we've been consolidating nicely. We're looking for a breakout on oil. Nice cup handle formation. Looks as though oil is going up higher. Watch the energy stocks this week. They may catch a bid. Natural gas, which has been getting destroyed of late, catching the bid now. Up over 1.5% on the session. Nice gap up higher. I would not chase this. We need to see a little bit more consolidation. 4-hour time frame. I'm really liking the RSI. Higher lows. And at current, we've broken out on a 4-hour time frame. Check out agriculture prices. We're always on the lookout for inflation. We can't trust the Federal Reserve to tell us the truth. But we can look at the charts. And they've been screaming inflation for a long time now, and we knew it wasn't transitory. Now even the Federal Reserve admits it. We're going up higher here. Corn, Tetrium has a fund. I think the symbol is CORN. Corn looks like it's getting ready to break out here, weekly time frame. That's an ETF, looking very good. Let's go back, 4-hour chart, take a look at other agriculture names. Soybeans, let's go to a weekly chart, see what's doing there. Soybeans pulled back. We are now in a wedge formation. And you may be out there saying, why is this guy going over soybean prices? He's not a futures trader. You're right, I'm not a futures trader. We do look for investments, but by and large, what we're doing here is we're doing the job that the Federal Reserve should be doing, giving us honest news. So we're on the lookout for rising inflation. Where is it? Pockets of inflation. Do we see it in agriculture? Sure. Is it in lumber? Sure. And we're just validating or invalidating what we're being told by the Federal Reserve. Finally, Jay Powell told the truth the other day in front of Congress. His exact words were, give me some slack here. His exact words that we need to remove the word transitory from our lexicon. So, yeah, finally, welcome aboard. Welcome aboard, Jay Powell. Now he gets it. But unfortunately, he's talking very, very hawkish, and I'm a little bit worried about this Fed meeting. So soybeans consolidating nicely here. This is a weekly time frame, and the trend is clearly up. Right? We've pulled back. Commodities are very volatile. They go up rapidly. They come down rapidly. But we're still putting in higher lows. That's all that matters. We did corn. We did natural. Let's go to silver. Silver looking good here, up a 0.25 percentage point. All right. So I wanted equities to settle down. Let's start out with, before we go to equities, Bitcoin. Bitcoin gaining. It was up earlier, but it's really tacked on more since I last looked. Okay. Let's go to the Russell 2000. The Russell 2000 is up. When I take a look at the Russell 2000 being up, I want to take a look at yields or bond prices. Bond prices are up, meaning that yields are down, at least slightly. S&P 500. We are up. We have a new weekly high. What's the high here? High 47.12. No, we do not have a new weekly high. We met last week's high. No follow through yet. Let's set up an alert here. Okay, what else do we have? Dow clearly a new weekly high. So large caps looking good. I don't expect a big rebound on the Russell 2000 this week. Probably some consolidation, maybe a larger rebound at the back half of the week, but the small caps have just been annihilated of late. Let's go to some comments. Hey, Jody. Hi to you. Louis. Yes, we did speak earlier. Yes, we did speak earlier. I did. Yes, thank you very much. Thank you. It was a great day. Welcome aboard, Louis. And I got your chart request. Oh, you can't. Oh my God, I did it again. I'm sorry. That would help. I'm such an idiot. I did that the other day too. Thank you, Larry. Okay. So large caps looking good. Small caps, okay. Commodities looking like they want to get ready to move up higher. Let's go back to gold. Gold is at the highs of the session, still down though versus Friday. And I want to go back to that chart of corn so you could see it on a weekly chart, what I was talking about. Here's the breakout. We broke out the week of the 22nd of November. And nice consolidation here. We retested the breakout point. This is what I always talk about. Last week was a down week. Actually, this is the week before last. The weekly chart hasn't updated yet. So this is not this week yet. This is last week, this green bar. So we broke out the week of the 22nd, retested the week of the 29th. Last week, almost a follow through. We had a bullish reversal bar. I'm not going to be the least bit surprised to see a move higher right out of the gates on corn. This is a beautiful setup. I really like it. So you can take this, do a screen capture, put it on your wall. If you're looking for a great setup, what one looks like, this is it. We broke out above resistance, check that box, retest. All down weeks are not made equal. This was a very good week. Why? We retested not one support level, but two. And sure, we closed down in the week, but we closed off the lows of the week. And most importantly, we closed above those support levels. And last week, confidence built. Corn's going up higher. So watch out for the Tetrium Fund. It's probably a good looking chart, similar to this chart here. Corn, the symbol. No, NFGC is my largest holding, like Eric Sprott. High grade gold, and have to lab it in the strong to handle. They're coming this week. I see. Okay, I got you. So you don't trade futures? No, I don't. I just don't. It's not my thing. I trade equity options, and I trade. I'll trade corn, but using an ETF on. I think it's either on the Amex or the New York Stock Exchange. But no, I don't trade. I do not trade futures. Jody's laughing at me. Okay. All right. We use it, just to go back to Boyd's question here. We use the futures to help direct us, help to give us an indication of as to where the equity markets are going to move in the coming week. So we don't need to trade the futures to get value out of the futures as an edge on a Sunday night. Taking a look at the price action, getting a feel for how we're going to open up on Monday. Right now, it's looking pretty good. Okay, let's talk about. I'm going to share this with you guys. It's a really good interview. I was watching it before I went live. You may want to check it out later. Let's talk about economic data. All right, so jobless claims came in a lot lower than what was expected. That's a great thing. I mean, I don't remember, even before COVID, I don't remember seeing a number this low in quite a while, a really long time. So that's good to see. Inventories are rising. Inventories are rising, folks. And even I was watching an interview with Kathy Wood. Actually, it was her Friday live stream that she does. And she was talking about she expected inventories to rise. She was right. So I knock Kathy Wood for buying wrong. However, when she's right on certain things, we want to credit. And Kathy Wood did make that call. And that was before this release. The CPI came in a lot hotter than expected. The year-over-year change, and this is not the same way that they calculated the CPI back in the 1970s. So you'll hear the talking heads on CNBC say, well, it's nowhere near as bad as it was in the 1970s. Well, of course not. It's calculated different. If they use the way we calculate inflation now, and they applied it to inflation back in the 70s, well, we'd have higher inflation now than we did back in the 70s. So I was listening to Peter Schiff, and he was saying if they use the calculation that they did back in the 70s, we're looking at inflation at between 13.5% year over year to 15%. So don't let them take parking space up in your head. This is a misleading number. The Federal Reserve doesn't even use it. They use the PCE, which is also manipulated. Take a look at the import-export prices, and that's a lot more of a reasonable set of numbers to go by. But inflation, hot, very, very hot. This coming week, Monday, nothing coming out. Tuesday, NFIB Small Business Index. I believe that's a sentiment index for small business owners. It can move the Russell 2000. Wednesday, retail sales, important number. Empire State Manufacturing Index, NEHB Home Builders Index. Home builders looking very, very good. I checked out the chart earlier, and they're looking very good. Watch business inventories coming out this week. I think this is going to become a story that we have inflation, supposedly supply chain disruptions, yet business inventories are rising. What's that all about? So watch out for this. And of course, we get on Wednesday, 2 p.m., Fed Chair Powell comes out, and he will give us the venerable Jay Powell will come out and bestow upon us his wisdom about what the Federal Reserve will be doing next to inflate away our debt and allow the federal government to tax us using inflation. So watch out for a very hawkish tone out of the Fed chair. He's been hawkish of late, and that's not going to be good for the markets. I'm worried about it. Thursday, initial jobs claims, we get that every week. Building permits, forward-looking indicator for housing starts. Friday, nothing scheduled. Valuations of the market going into the new trading week. We rebounded last week. We have 39.53 on the Shiller PE ratio, the second highest since the dot-com bubble. So we have a very, very expensive market as measured by the Shiller PE ratio. Then when we move on to the Buffett indicator, the market remains strongly overvalued. This increased slightly from 2.1 standard deviations beyond the historical trend line here to 2.2 standard deviations. The high, I think, was either 3.0 or 3.1 standard deviations. We have not revisited that level. I'm not surprised. That's like once in a lifetime type stuff, but we're still very, very elevated. Now, what concerns me is that we have a Federal Reserve adopting a hawkish tone. They want to raise rates because you have, I'll go to it in a moment. I don't want to go off track here. I'm going to stay consistent. I'll go to it in a moment. I don't want to lose my train of thought. S&P 500, this is a monthly chart. We are up 3.18%. I promised in prior live streams beginning, I think, last week or the week before that we go over the monthly S&P 500, keeping an eye out for blow off top, double top, stalling, and a potential rollover on the S&P 500, because we want to pull the ripcord on the parachute so that we get the heck out of this if this market begins to roll over. Now is not the time. It looks as though they want to take it up higher, at least for the back half of the year. So at current, we're stone's throw away from new all-time highs on the S&P 500. Is the sound back on now? Could you not hear me with that video off? That's the first time I use that. Well, that stinks. I thought I had a new tool to play with. Jody, can you let me know if you have sound now? You good now? Oh, thank you. Okay. Let's go back here. All right. So I want to go back to the S&P 500 quickly because I lost audio. We're stone's throw away from new all-time highs. We're going to continue to watch this chart because we did break down below this rising lower band of support last month. But once again, as we see quite often, you get a breakdown and then you get a rally in an effort to try to recapture support. We'll see whether or not we're able to recapture support, but this may just be the new upper band of resistance on the S&P 500. And remember, we are strongly overvalued, and this, when it goes, it's not going to be pretty. Yield curve. Okay, what's the yield curve? It's when the 2-year Treasury yield pays more than the 10-year Treasury yield. And in a healthy economy, you want to see bond yields rising. That's healthy. That's good. That's a strong economy. And we were doing well. And then in March, we peaked out. And the bond market is pricing in something. The bond market is worried about what we can only speculate about right now. But the bond market is worried. The yield curve is going in the wrong direction. This does not mean go sell your stocks. Stocks can still go higher. But when you start to invert, what is an inversion? That's when your 2-year Treasury yield pays more than 10-year Treasury yield. It's not supposed to be there. And in these gray areas here, these are all events, cataclysmic events. Most recently, COVID. The bond market was sniffing out an event long before COVID hit. This is why we always watch the bond market. The bond market knows everything. Rarely does it get it wrong. Stock market does get it wrong. It stays way too bullish for way too long, way too bearish for way too long. But the bond market is always right. And the bond market is far larger than the stock market. So yield curve going in the wrong direction. Now, we can only speculate what the bond market is worried about. One thing that could be worried about is that you have the Federal Reserve which is doing a taper. It's now tapering. So if you look at this chart, and I would overlay the S&P 500 on top of this chart, well, they go up lockstep. They go up lockstep. But what the Federal Reserve is committed to doing now is to buy less. So the week of the 24th, the Fed's balance sheet went lower. It went down. But what also was down? Stocks. So it's going to be very interesting to see what the Federal Reserve says, or the Fed chair says this week. If they say we're going to double up on taper, I don't know how the stock market doesn't go down. I don't know how it does it. The only reason why it's probably staying up right now is so that the whales can rotate out of their positions. They need liquidity. They need the Santa Claus rally to reduce their exposure. They can't sell all their positions at once because they're too big. We can do it. Mohammed El-Arian, when he speaks, you got to listen. El-Arian said Fed made worst inflation call ever. Listen, my office is in my basement of my house. I've been saying that they've been wrong for a year and a half, 2 years now. So if I get it wrong, I can't believe that the Federal Reserve got it wrong. I think they're just nefarious. But if they got it wrong, they're incompetent. He should have never been renominated, and he should be out. Meaning Fed Chair Powell. Friday, we spoke about this. 7% increase in consumer prices is 11% when house prices are added in. Well, yeah. So I'm not sure if they're referencing the they're referencing owner's equivalent rent here. They don't really take into consideration. They don't go to renters or landlords and say, hey, listen, I'm the CPI guy, and I want to know how much higher are rents versus last year or last month, so I can calculate how much renters are actually paying. No, what they do is they do a survey of homeowners. How much do you think you would be paying rent if you had to go rent? And they lowball the number rather than going in and taking a really actual calculation of what the rise of rents are. Because rents are never transitory. Rents never go down. They only go up one way or stay flat. So, yeah, and I'm sure this is, again, Peter Schiff calculating 13.5% to 15% CPI measured back during the 1970s model, and that would calculate in rent being honest. So they're using the CPI calculation as of now. This is still underestimating actual inflation. Inflation surges near 40-year high. Wages aren't keeping up. So this is an important headline. So think about it. We spoke about this last week because we had non-farm payrolls come out. They missed. Wages, we know that inflation has been going up, but wages did not meet expectations. It missed. So wages are not keeping up with inflation. Okay. So what we're doing here is we're being a little bit of Sherlock Holmesy. We're taking a look at this yield curve. We're saying, okay, we acknowledge that the bond market is saying, hey, something's wrong. And this is never wrong. Every time the yield curve inverts, we haven't inverted yet, may never happen. But every time we invert, there is an event, a severe economic event. Back here, S&L crisis. Here, I forget what this was. Here, dot-com bubble. I'll never forget that one. Here, the great financial crisis. And here, COVID. So it's got a pretty darn good track record. That's why we watch it. So when I start seeing headlines, horrible inflation call, no doubt. Wages aren't keeping up with inflation. And then you get this. Biden's new regressive methane tax will raise average Americans' gas bill by 17%. Okay. All right. So, all right. I'm just a guy sitting in my basement. It's not my mom's basement. I own a house. So I got inflation that's on the rise, worse since the 1970s. Now I got a president that can't stop spending money, giving out money to people. In fact, in New York City here, they voted, the legislative voted last week to allow non-citizens to vote in city elections. That's off topic, but this is where we're going, this insanity. So we have continued pressure on the part of the government to try to hamstring, to take the legs out from the consumer. We expect a sea change. Morgan Stanley admits it was wrong, now sees liftoff, meaning rate increases in 2022 as Goldman goes all in with 7 rate hikes in 2022. So that means taper, if they stay on the same path of reducing their buying, they should be done with their buying by June. And that would be the end of taper. No more $120 billion per month. Every month it goes down. Add to that, you're going to see 7 rate increases. Did I mention that the stock market is strongly overvalued? Did I mention that the Shiller PE ratio is the second highest than the dot-com bubble? And when you have governments that have no real serious agenda, you have an approval rating of a president and vice president that are historic lows, what do? You go to war. You try to stoke nationalism. Sorry, not nationality. Nationalism. We continue to try to pick a fight over in the Ukraine with the Russians. So what we're looking for here, again, folks, what is the bond market worried about? Is it one of these? Inflation, taxes, war? Is it a mixture of these? We don't know yet. We'll know when it happens. China, another problem. You had Evergrande go under, another real estate company go under last week. China has a lot of problems. They're pulling back from capitalism, or their version of capitalism. Stung by a semi-shortage, Chinese auto sales fall for a 7th straight month. So that's China, another threat. Insiders dumping stocks to their own companies at a record pace. Yet, share buybacks continue. So they're propping up their own stock prices. That way they get their bonuses. They can liquidate the stock that they own. They're getting out. They're parachuting out. They're going to have their nest egg. Don't let this roll over on you. Keep an eye on this chart, the monthly chart of the S&P 500. And this goes to robotics. The rise in wages. You have McDonald's workers making $18 an hour now. That's not going to last. All that the Biden agenda has done, meaning the rise in wages, all you've done is made the cost effectiveness of robotics far more cost effective. If you're a CFO or a CTO of a company and you're thinking about for the next 5 years your business plan, do you invest in robotics rather than be at the mercy of employees and the demands for higher wages for low-skilled work? I don't think so. So DHL is keeping pace with the holiday rush by adding 1,500 new robots. They don't file lawsuits. They don't take time off. They break down, but you get them fixed. So this is only going to pick up artificial intelligence, robotics. Let's talk a little bit about seasonality going into the back half of the year. Folks, this is TrendSpider, 35% discount code below. I'm not going to do my usual shtick, but let's talk about seasonality. This comes with TrendSpider. These are weekly views. I thought that this would be higher. This is only 5 years. Let's go back 10 years. Yeah, so this makes sense now. All right, so this is the week that we're going into. We're usually up 55% of the time, and the final week of the year, no great shot, up 70% of the time. I thought that would have been higher, to be honest with you. I mentioned earlier, gold. This is 12 years. This coming week is a very good year, going back 12 years. But remember, we've gone through a bear market over the past 12 years, so it kind of skews the numbers. So let's make this 5 years. Seven years. 7 years works. All right, so these next 2 weeks, we're up 67% of the times. Then think about this. Over the past 7 years, the final week of the year, up 100% of the time. That's a pretty good statistic. We are long gold. We are long of the gold miners. GDX. Very good price action. This week is only up 50% of the times, but you're talking about, this goes back 77 years now. You're up 88% of the times, the second to last week of the year, up 100% of the times, the final week. So good seasonality moving into the back half of the year. The question is, does the Federal Reserve throw a monkey wrench into it? We'll know on Wednesday. All right, let's go to some comments. PPI Tuesday. Look out below when that happens. Yeah, you're not kidding. No, I wouldn't say that. You can get parabolic move up higher. RL's question, should we get out of all long positions? No, I wouldn't say that. You know, if you're worried, scale out, 5% a month, raise capital, have some dry gunpowder just in case an event happens. And at least if an event happens and you get one of these COVID meltdowns, at least you have capital on the sidelines, because we'll be here. And I'll be looking for the Buffett indicator to say we're either fairly valued or undervalued. Ultimately, we want to be in a position where on a Sunday night, I'm able to come on and say, okay, I think we just hit new highs on the S&P 500 week over week. What's that message? Yeah. S&P's new weekly highs. And there you have it. That bodes well for the week. So we have the Dow making new highs. We have the S&P making new highs. Let's check in with the NASDAQ. Not yet. NASDAQ lagging. Okay. So we want to be able to, when that sell-off comes, and it'll come, it always does come. This would be my, I don't know, fourth bubble, third bubble. It'll come. It's going to come. And it's going to come on a day where the futures are down dramatically. I'm talking, 1,000 points down on the Dow. Horrible, horrible. And you got to step into the breach, hold your nose, and buy. But you want to make sure that you're buying at historical support levels at prices that are reasonable, so that if you're wrong, you know that ultimately at some point in time, you're going to come back. And don't go jumping in with both feet. Nibble, nibble, nibble. You never know if you're getting in at the bottom. Like whenever you're in a sell-off, in a correction, or especially a bubble bursting, There's a saying I always like to use. Today's lows could be tomorrow's highs. Today's lows could be tomorrow's highs. The reason why I say that is that a lot of people will be reluctant because they didn't get out when they could have. They don't want to get forced out because that's the ego taking over. So they don't want to admit that they didn't get out of the top. They had a horrible down day, down 1,000 points. It's got to pop back up tomorrow. I'm going to get the rebound. No, it doesn't always happen. So you can also get another gap down. Today's lows may be tomorrow's highs. Write that down. Save it. It's very important. Okay, let's do some chart requests. I have a bunch to go over. I got to go to 7 o'clock tonight. We have about 15 minutes. All right, Larry, EPD. Let me go to the monthly chart first. Weekly chart looks good. Looks good. This is a monthly chart. I just put up the automated trend lines. You can see if you bought down here where the automated trend line said to buy, and you set up an alert up here to let you know that we had hit resistance, you could have got out here and avoided this sell-off. So now we have good support. It was resistance back here. It is now support. We bounced last week. Too early to talk about volume on the month. The week we can. All right, so the weekly chart, we did a little bit of a death match with this resistance level last week and the stock loss. However, we retraced to a support level and bounced. I think this could be, if you wanted to buy it, I'd have no problem with you buying it. Just use a stop right below the week prior's lows of $20.80. If you close down below that mark, you'd want to be out. RSI, we doing anything sexy here? We broke out on RSI. Daily chart. We broke out on the daily chart as well. Let's check out seasonality. This only goes back 7 years. Do we have more data here? 15 years worth of data. Seasonally favorable period of time, Larry. Strong seasonal trends going into the back half of the year. So I like it. EQNR. Oh, Lewis, I don't know if you're still out there or not. SDEG, you put that in the members area, the request. That symbol did not come up. SDEG, I checked that out earlier. If you want to make sure that's accurate, I'd appreciate it. Equinor. Good healthy uptrend here. Here's our automated trend lines. Again, folks, the power of automation. Click of a button. Now you know why we sold off. There was resistance above. RSI looking really strong. So we rallied, we pulled back on profit taking, consolidating. Let's go to a weekly chart. Here's your rising, again, automated trend lines. Here's your rising uptrend channel in green, upper band in green, lower band in green. For giggles, I would set up an alert down here just in case you get a sell-off. Now, the one thing I don't like about last week is that we sold off the highs. You got resistance up here at 27.38. So I'd really like, if we don't get the pullback to that lower band of support, I wouldn't be comfortable with buying here. I'd rather wait and pay up. For a breakout. So the ideal situation would be to get a pullback, buy at this rising lower band of support, then having initiated your position, once that alert fires off on a breakout above this upper band of resistance, then you add more. So that's what I would do, because after that, then this up here becomes your target for a rising upper band of resistance. So if you wanted to book profits, I'm not gonna keep this live because I'm not in the position. But if you wanted to exit, yeah, you could set it for as long as it goes out, 60 days, and get notified to get out. As a matter of fact, I know I was chatting with Dan over at TrendSpider. I think he's doing tests with a couple of brokerages. This is going to be integrated with brokerage accounts now. So you're going to probably be able to trade off of the TrendSpider platform in the coming year. He told me one of the names of who he's doing a test with, but I don't know if I'm at liberty to discuss that. So there you have it. Good volume last week, looking good. Daily chart. Yeah, you got to wait for the breakout. Ideally, you get a retrace, but we closed right at resistance yesterday. Friday. All right, next chart of INVZ. Ooh, not a lot of data here. Extremely volatile. Is this a dead cat bounce? Maybe. Right now, all I would be interested in is, do we put in higher lows? For that, let's go to a weekly chart. So all I care about here is this. Higher lows, man. Gotta hold the support level. You could buy it here, but if we break, I would get out. $8.06 is your pivot point on this potential W formation. I'm liking RSI. Volume could have been better last week. You saw a little bit of selling at resistance. So this is a stock that's in show me mode. It's got to show us that it's done selling off. So be careful with it. I would stay very, very small. Daily chart. We remain in the daily downtrend channel. I would wait for the breakout before initiating a position. Let's see if it's got strength. Our alerts are set. We're good to go. SDEG did, regarding energy, it wouldn't be smart to ignore the Permian Basin companies, but I've read some positive things about EQNR. All right, cool. Please share in the forum, or if you want to share here. We'd love to have the any articles that you have, Larry. We always respect your opinion. William, my friend lives in Phoenix, and he said that their McDonald's went fully automated. People lost jobs. Yeah, I was coming back from, I was up by Ocala in Florida. I went to a McDonald's. It was the worst McDonald's in the world, but they went, for the most part, fully automated. The kiosks were a disaster area, but you could see that's where we're going. I mean, I'm looking at the, I was not impressed with the automation whatsoever, how you check out, how you order. But I'm looking at the employees, and they were a wreck. They were a train wreck. Their manager was a train wreck. And I'm saying, I'm going to pay these people 18, 20 bucks an hour. And if they slip, I got to get sued. And all the nightmares that they probably bring to the table in terms of disciplinary action. Bring on the robots. Bring on the kiosks. That's what I would be if I was in that business. Bring it on. Reduce my expenses. It's sad. It's very, very sad. Crisp, cutting losses or hang in. Right now, we're looking at CRISPR for a higher low on CRISPR. I mentioned on CRISPR the other day on Thursday night, we're watching for a retrace, and we got the retrace. And the chart I pointed out, I was watching out for first. We booked profits here, and it did continue apart. We didn't get out and grab the last dollar. That's not our goal. We just know the pattern of what normally happens when the stock is at extreme oversold levels. You get a rally, and then you get a pullback. It's just the course of events. I didn't want to lose my profits. We were stopped out a few days earlier. We made back that loss, and we made an additional 5.5% on top of that loss. So we did well with it. Now we're pulling back, and on our 4-hour chart, as a matter of fact, it should be up here. The alerts in gray were fired off. I know it fired. Here it is. CRISPR 4-hour alert had fired off. And there it is. Right here in green. All right, so CRISPR, I would like to see retrace back down here to between $70 and $72 per share. Will we see the 60s? I don't know. I don't know. We'll see how it opens up, how volume is to the downside. I'm looking to get back in. What I may do, though, is if we get down to 72 and the share price looks good, it looks like it may have bottomed out, what I may do is I may buy some common stock. Say if I want to buy 100 shares, I want to have exposure to 100 shares, or say 125 shares. I may buy 25 shares, but then sell a 65 or 70 naked put. Not buy the put, sell the put, generate a premium, bringing down my basis cost if the shares are assigned to me. If they are not assigned to me and they close above my strike price, I still collect the premium. So it's just a way to get exposed to the long side of a stock. And if the shares are put to you, you get a discount on the share price. So we want to get alerted pretty quickly here. So our alert is set on CRISPR. Very, very volatile. Let's move on to Lewis, SBNY, that's SigBank. Bad day on Friday. Monthly chart, no new monthly highs so far. Banks are underperforming. Yields were up on the week last week, yet this bank was down. It's down in the month. Let's take a look at the weekly chart. Remember, banks like rising yields, yet this stock is down. So I would not buy it here. I'd create an alert. I would keep some sensitivity on the lines or the area in purple or blue, wherever it is. SBNY. If this alert fires off and you see a reversal off of this support level and yields are moving up higher and the S&P 500 is moving up higher as well, that would be a good buy signal. Right here, right now, I'm not feeling the love. You know, we saw a little bit of a bounce last week. We rallied off of what moving average is this? 20-period moving average. Volume was high, though. I don't like the price action at all. Wait for a retrace back down to this lower band of support. I think that's a safe bet here. See if it holds. Another way to play it is that you buy down here, nibble, leg in, and then wait for the breakout. And if it never does come down here, this alert never fires off, giving you an opportunity to get in at that lower price, then if you break out, if it breaks out above resistance, then you could buy. Until then, I don't see a compelling reason to enter the shares or buy the shares. You know, this $300 per share mark may act as support. You never know. But I prefer to get in down here at around the high 290s. What else do we have? Let's go to comments. Well, Bob, I'm selling Christmas trees in Florida, 82 degrees for the past week. Not much of a winter here. I'm jealous, man. It's getting cold up here. Okay, thank Jody. You're welcome. Lois, it's going into the S&P on December 20th. SigBank? Signature Bank? All right. We did SBNY, SITM, is that right? I can't even read my own. FDS. SDNG. SITM is the symbol. We're down in the month. New monthly high, but it was rejected. Weekly chart. So, yeah, here's what it's doing. you're in a rising up trend channel, right? So the line in red, again, the power of the automated trend line, folks, saves me a lot of time. Here's your lower band. This is where you buy. Whenever you're in these uptrend channels, respect them. Use them. They're a tool. They're invaluable. Set your alert down here. Have faith that it'll get tested. Leave a little bit of sensitivity. And you can see that. You can see that every time we hit this upper band in red, it sells off. And that's okay. So you know exactly where, if you enter down here, you know exactly where to get out. The minute that you enter that trade, go right over to TrendSpider, create an alert right up here at this upper band in red, and set up an alert saying, okay, upper band of resistance hit, time to get out. If that's your game plan. And we spoke earlier, you're looking for swing trade opportunities, so that's what I would do. Simple as that. Shouldn't getting into the S&P give them a bounce? Yeah, because the funds will need to buy the shares. So a lot of times, though, the value the stock gets happens on the news, not necessarily when it makes its debut into the S&P 500. So just be aware that it could be a buy the news event, and then when the event occurs, really it's anticlimactic, because the funds, they're just going to buy now, and so that they're not paying top dollar when it gets added to the S&P 500. So SEDG. Okay, that makes sense now. I was trading PMC Sierra. I've mentioned this a bunch of times. This is around when it was added to the S&P 500. News came out, skyrocketed. Added to the S&P 500, crickets, nothing happened. But I should caveat and say that was a dot-com bubble as well. All right, Solar Edge. A lot of good support down here. Let's bring up our automated trend lines already on. Good support below. Building a base. Let's go to a weekly chart. Ugh. No bueno, my friend. So nice rally. This support level here didn't hold. It failed. So when you see that, you got to say, okay, where to next? 252.47 is where I'd be looking to buy in. Maybe up here at 261.50. I would just create an alert there. Because we broke down, they rallied it last week in an effort to recapture. It was above. This is why we do not buy. If we're looking to buy a stock due to the weekly chart, I'm waiting until Thursday, Friday, because earlier in the week, a very strong week. Wow, nice rally back. This down week was almost negated. What happened by Friday afternoon? Hammered. Daily chart. So do we put in higher lows? We don't know. Right? The stress is not on us. The market's going to tell us whether or not this stock is done going down. If it's not done going down, it's going to break the support level, head down to where there are buyers of like mind willing to bid the shares back up. I would wait until then. If we consolidate here for a few days, we close out the week without breaking this lower band of support, then it becomes interesting. Until then, I feel no compelling reason whatsoever to go buying the shares. I would wait on this one. All right. And Nvidia, I have a position here for disclosure purposes. Out of curiosity, I want to go to seasonality. Not wonderful. Oh, wait a minute. Let me go back to that for a second. For whatever reason, they have 58 down here, 0% up. That's no bearing on us. So the seasonality here is not great in the back half of the year. Roughly 50% of the time, 55% of the time up. We'd like to have seen better odds. We have an options position here. Now, our strike with a strangle, that's the simultaneous sale of a call and a put option deep out of the money. We were at the 235 strike. I rolled up to the 250s, I believe it was, 250s, I think. Because I think that we're done going down and we're probably going to move up higher on the video. I hope. I hope. So Nvidia looking good into the new trading week. At least it stopped going down. And those options that I sold, the time decay works in our favor. We want that time decay, also known as theta decay, to work for us. We're in a wedge formation. So no compelling reason to go running in tomorrow to buy. We have good support below. We have resistance above. Wait for the breakout. That's what I would do. All right, let's see. I'm not going to have a lot of time yet. No, I'm way over. Sorry, folks. I could do one more. All right, we'll do Abel's BNGO. Genomics. No compelling reason to buy this. I mean, the sector's been beaten up. I think we're a lot closer to a bottom than some may think here. You have support right about here, and you're below that support level. So I'm not liking these shares. I'm looking for a reason to buy them. This is a monthly chart. Ideally, you're going to close above $3.50 per share. Ideally, $4 a share. That would be a bullish event on the month. Let's go to the weekly chart. They tried to rally the shares last week. No bueno. Daily chart. Watch for your higher low. That's all I would do right now. If we break to new lower lows, delete this line, create a new line, watch for that higher low. If it breaks to new lower lows, I would avoid. I mean, it's just not behaving properly. So I would not buy this right now. I would wait for some sort of event. I like RSI. RSI is potentially putting in a higher low here. So this is what I want to see, but on share price. We don't know, though, whether or not this is going to hold. So take your crayon out, do one of these. You're in a tight triangle formation. Watch for the breakout above. Then you can buy on strength. You want to make sure, rule number one, the stock is done going down before you start buying. That's got to be validated. Stay small and then add on strength. That's how I would play this one. Very, very, very volatile, these genomic stocks. So just be careful. Folks, thank you for being here. Have a profitable trading week. Don't forget TrendSpider 35% off. I give it away free to a 14-day free trial offer members to the contrarian traders, silver and gold. Have a great night. I appreciate you being here. Like, subscribe, follow wherever you're watching this on Web 2.0. Have a great night. Be well.